Everybody, welcome to One More Round with Josh Norris. I'm excited today to have my good friend Cory Krebs. Cory is a senior loan officer. He's got tons of experience, but just to give you a background, he graduated from the University of Louisville in 2003. After graduating with a degree in finance, spent 2 years managing nightclubs and restaurants in Louisville before getting into the mortgage industry. In his almost 20 years experience, he has helped thousands of clients purchase their dream homes and use their equity to save thousands of dollars a month and pay off their home entirely well ahead of schedule. He moved to Arizona from Kentucky in December 2017. An avid golfer and a loving father, he is proud to make Arizona his home. Welcome, Cory.
Thank you very much. Happy to be here. Thanks for having me.
Glad to have you. And I didn't mention in there, you were the current Albatross champion in our golf league.
That is so true. So happy to have that title.
Yeah, and I don't know if you'll be able to play in July to defend.
Well, I'm going to try.
Otherwise, somebody else will get scratched.
Yeah, looking at you. Who has the most names on there?
Guy who hasn't actually played in 2 months, right?
Well, I haven't either. It's been too darn hot. So.
Awesome, man. Well, I thought this would be a really good podcast to have you on because we're in a very timely situation right now in the housing market. It's changing. The real estate side, the actual loans and interest rates and all this stuff. And I thought it'd be good to give people some clarity. Yeah. Like right now, we're in June of 2022. What's it like? What to expect? And how eventually you could help them. So before we get into all that stuff, how did you get into mortgages? Like, what was your calling there?
Honestly, it was kind of by dumb luck. Graduated college, had a degree in finance and business, and didn't really know what I wanted to do with it. It was mainly in accounting, but that just seemed, no offense to accountants, it just seemed so mundane and monotonous and just the same books every day. I wanted something different. I grew up being a golfer, and everybody's golf swing is different, so I went into buying my first house, and when I did, it made me realize how many things were so different from my situation that would have been from somebody else's. Just like a golf swing, how it's always different. It's new every time. And I really enjoyed that aspect of it, to where I get to learn something new from a new person, a new client every time. It's every one of that was. I realized it would have been a puzzle every time, and it would have been something for me to do. And it's exciting. So when I bought my first house, that's what made me finally realize I like this process and I like this industry. I like how this worked. But after college, I was in restaurant management, and I had a group that came in, and they would come in every week, every Friday at 5 o'clock, sometimes 4 o'clock, 3 o'clock. They'd come in. They're all cutting it up. Yep, happy, hitting that happy hour, laughing it up, and there was a nice group of guys, so I got to know them as I was managing the bar and got to talking to them more and more, and he told me what they did. They were in the mortgage finance business, and it was like, hey, I just remember when I just bought my first house, how cool that was. Can I meet with you and talk with you and find out more about it? So I went into the office and sat with them, and they said, dude, you need to do this. You have to do this. He goes, you're going to be on my team. You're starting next week. I was like, whoa. I don't know if I'm ready for it, but it's an aggressive industry, and they saw that I appreciated it, that I understood it, and that it was a fit for me, and they really pushed me to get in. So I did in 2005.
Awesome. Yeah, and it's funny you bring it up. I never thought about it, but loans are like a puzzle. Mm-hmm. You do have to put them together with the right pieces in the right place, and that puzzle is going to look different from each person and their situation.
Absolutely. That
portion's got to be fun if you like to solve problems.
Yes,
right?
Love to. Yeah.
Yeah. If you don't like to solve problems, probably not your cup of tea.
No, and that's what I kept referring that to the golf swing, because during that crash, I actually got out of the industry for a few years and became a PGA professional, and I was teaching and helping people, and I realized how much the golf swing truly, really was like a mortgage loan or an application. It's always going to be different from person to person to person. So then I had my daughter and couldn't live on the golf course every day, so I had to get back into the real world and went back into finances, and it just made me want to get back into that. So it's always been something I've always appreciated and enjoyed and wanted to do. So my life always took me back to it.
Awesome. Well, I met you when you came out here to Arizona. You're cousins with very good friends of mine, and you come out here actually to work for Johnny.
Yep.
And as we got to know each other, I'm like, yeah. I had gotten to know a lot of loan officers during that period of time.
That's true.
And you were one of the sharpest. I'm like, cool. And you were successful in if if I remember correctly, you were in a broker situation before.
I was, yeah. I was with a broker in Louisville, Kentucky, and came out here for a wedding in June of 2017, and that's where Johnny and I got together, at the wedding, and drinking, having fun, and dude, you should so move out here. Yeah, whatever. Well, months later, recruitment, and then signed the dotted line.
But you came over here in a not broker situation, and you thrived. And I believe it was Academy at the time, and now you're at Security National Mortgage Company. What was it, do you think you were able to, especially coming in not knowing anybody other than relatives, how were you able to kind of come into this market and be successful?
It was more about the relations and relationships that I knew other people had that I could tap into and meet and grow from there. So, just simple introductions, and then a follow-up and a phone call and say, hey, let's go out to lunch, dinner. You get to know me, you'll get to like me, and you'll get to understand that I'm knowledgeable in what I do, I'm good at what I do, and I'm reliable. So it was just building those relationships slowly and surely. And plus I had a large database from where I came, and I kept my licenses in Kentucky, Indiana, Georgia, kept those licenses, so I still have that client base that I worked with back then, those agents I worked with back then, and then rekindling some of those now to grow even more. So
awesome. Yeah. Cool. Well, let's get into it. Let's get into the state of 2022 in June, where we're at, and a lot of changes. So is the housing market strong right now?
The housing market is strong. It is extremely strong. It's stronger than it ever has been. I mean, you see houses appreciating like crazy, and we don't really see that. Everybody talks about that drop off. When are they going to drop? I'll wait till houses drop. With as much demand that's out there and as little supply that's out there, we just don't see that changing. We don't. For instance, you look at people from California that are moving out here. This is the biggest correlation that I see, is all these cash offers, especially for here in Arizona. All these cash offers that people are getting, they're selling their house for $500,000, but yet somebody's coming in and offering $550,000, $575,000 for that house. Well, that person is moving from California, where they sold their 1,000 square foot home for $2 million, and then they're going to buy 400,000 or 4,000 square foot house out here for $600,000. Like, well, yeah, I've got $1 million left over from the equity I've earned that I can add as a cash value. Yeah, no appraisal, no inspection, I'll take it because I don't want to go rent because it's super darn high. Well, as long as that continues to happen, the home prices are going to continue to increase. As long as the home prices continue to increase, there's no point in it decreasing. So at first what's going to have to happen is a plateau where it levels off, to where things start to just get reined in, and after inflation is over with and as the recession starts to hit, that's where that would happen. Home prices stay extremely strong in recession periods. So there's no reason to say, as we're coming out of an inflation period and heading toward a recession period, there's no reason to say that home prices would decrease, because it's historically doesn't happen.
Which is huge. Yeah. And I mean, we had a problem out here for a long time where our inventory was so low that, you had bidding wars on every single property that's out here. Are we starting to see that taper a little bit?
A little bit. You're not having 30 offers the first day that the house is listed. Now you may have 10. So we are seeing it slow down. The inventory is creeping back up. You have a lot of people that are selling houses that they bought at the beginning of this period because they could see that track of inflation and appreciation in houses. So they're buying it at one point and then 6 months later reselling it without doing anything to it. These are just investors that come in that have the money and they know how the market works. So, but with standard, we're not seeing them do that as much. As prices continue to increase, they're slowing down how much they're purchasing as an investment. Still have plenty of people buying them as investments, turning them to Airbnbs and vacation homes. And so it's still, you're going to get your money back, whatever you put into it, because of the appreciation rate. But for regular home buyers, we are seeing it kind of die off a little bit to where it's more competitive now. For instance, I had a client last week. He's been shopping for 2 months. Prices keep going up, keep revising the pre-qual. He knows what he's approved for. He puts in an offer for a house at $600,000, or that's listed at $600,000. He offers $610,000. They're like, yeah, sure. Well, of course, it easily appraises at $610,000. So some people don't even realize how much equity they have in their house right now as well. I mean, over the last few years, we've had an appreciation of last year we've had an appreciation of 35% in the home value. And I bought a house in 2020 right before COVID. My house has doubled in value.
Yeah.
It's unprecedented. And then with the increase of that plus the increase of rates, it's been a tough time. It really has for a lot of people.
So, I mean, do you think a recession is looming right now with all of the raised rates and obviously the devaluation of our dollar and all that kind of stuff?
Oh yeah, including with gas prices and lumber prices, and it's across the board. So it's not just in the housing industry. But yeah, even our Federal Reserve Chairman Powell, he even said a recession is looming. Mm-hmm. Those guys don't say that unless they are confident.
Very calculated in their words.
Exactly. Yeah. Even though they were, they've been wrong over the last 6-7 months on how to deal with the rate of inflation. I mean, it's one of the largest. It's the largest rate of inflation we've seen since early '80s. I mean, we're at 5%. Back then, it was at 7%. And you can see the correlation of interest rates over that time as well. Mm-hmm. But I mean, you're still asking about the housing. Housing is it's still low, very, very low. I mean, for new construction builds, we used to have about a 7-month reserve, and this is including houses that were done, ready to move in. Mm-hmm. We had 7 months of reserves lined up. Right now, we have less than 1 month. So when they say we have 2 months reserves, it's like, well, you're all not looking at the right numbers. You're all looking at how many new constructions there are out there, which includes, vacant land, all these other, houses that don't even have permits on it yet, just the studs. Mm-hmm. They're including that. If you want to look at the real numbers, look at the numbers of what is done and ready to move into, because that's what people care about, and that's what they need right now.
Yep, absolutely. And new construction, I think, can really help save and thrive right now because, there are so many people looking and still moving here and wanting to.
Oh, absolutely. I mean, right now, and I think in around the nation, we have 400,000 houses available to be ready to move into. That don't have a contract on them. That they're just sitting there ready to accept an offer. Mm-hmm. Well, we have 1.4 million buyers out there. So we're short about 1 million houses in inventory. And that doesn't even include all the people who are trying to get out of rent to get in to buy. It's just, these are people who are pre-qualified that just already know what they're needing. Mm-hmm. 1.4, they're all going for 400,000 houses that are out there on the market.
Wow.
It's insane.
Yeah. It's an interesting time. And we've seen the rates for loans go up significantly.
Very significant.
Over the last 18 months, and we saw just a recent bump that again was significant. Are we gonna? Do you think? And I know you don't have the crystal ball. If you do, share it with me. But do you think that's going to continue to increase? The rates go up, or will we see a decrease at some point?
With all the news that's out there, I could say I don't know. I don't know, because they're saying that there may be another rate hike coming. Now, when the Fed increases the rate, that's not the mortgage interest rates. That's the Federal Reserve rate on which which banks borrow money and loan money to large companies. So when they increase the Federal Reserve rate, interest rates do not directly correlate, but they can. Actually, every time there's a rate hike, historically we see rates decrease. So we just had 2 large rate hikes the last 2 months, 50 basis points and 75 basis points. Mm-hmm. So our rate, the Federal Reserve has increased their rate by 1.25% up to a total of 3.375% in just the last couple months. Well, the last time in inflation that this happened, you see in 1980, they had the inflation rate go from 7% to 14%. Well, interest rates went from 12% to 18%. Mm-hmm. So what they did is they didn't through the recession, they kind of countered that, which is what what we're heading toward right now is another recession. And then the interest rates in 1980 went from 18 to 12%, and they're thinking this is going to happen again to where it's going to drop back down. Is it going to go back down to 3.5, 3? Hard to say, but we do historically when that happens, there is a rate reduction that happens after that.
So in the 80s, the rates were going up, the federal interest rates, right? But the actual loan rates were going down.
Well, they both went. Through the inflation, they both went up. Mm-hmm. But then they took measures to fix the inflation and start the recession, and that's where mortgage rates came down, and then the Federal Reserve came down as well with that. So it's more like the rates are going up, then the Fed Reserve goes up, and then once the Fed Reserve goes down, then that's when the rates go back down with it. So they don't necessarily follow. It doesn't follow the Fed rate. It's just that roller coaster ride that it's always taken.
Yeah,
and it will forever take.
Makes sense. So there's always these corrections that the government can make to make sure that they can pull us out of a recession, for example.
Yes.
And some of those things are like reducing mortgage rates. Okay.
Yep. And then selling off mortgage-backed securities, which they're really doing right now, and they've started doing this in 2008 to correct the housing crash that happened, and that's their quantitative easing. So typically they're buying about $120 billion worth of mortgage-backed securities every month. And that's what keeps mortgage rates low. Well, lately they've been needing more money, opening up the trade lines again, and probably, maybe a stimulus coming up, who knows, but they need to get that money somewhere. So through their quantitative easing, what they do is they reduce the amount of mortgage-backed securities they purchase every month. And this year they've done it by $15 billion a month. So they're going to save $15 billion a month and use that elsewhere to help stimulate the economy, and that's what may help start the recession.
Wow. So, and not to jump completely subjects on this, but kind of correlates. We're seeing lack of inventory, so we've seen rentals going up and the rental rates. What would you say to somebody that is trying to get into their first home, that's renting, and they're paying basically double what they would have 5 years ago in the same place? How can they get their first home? What are some keys, tips, tools to make sure that they are putting themselves in a good position? Let's talk about like a 25 to 30-year-old person.
Know where you are right now. Know why you're not buying right now. Because if you know why you're not buying, you know what you can change to make it possible to buy. And what we're looking at with the rentals is even today's rent. If you buy a house with an FHA, 3.5% down, and you still have mortgage insurance, that mortgage payment, even though you're putting very little money down, that mortgage payment will typically, with taxes, insurance, mortgage insurance, be less than what you would pay for rent. So you're not just only throwing money away, you're paying another person's house off for them while helping them make a ton of money. What we're seeing is that the mortgage payment would be less than a rent, but people don't know that. And there's still clients out there that think you still have to put 20% down. Oh God, no. There's so many myths that are still out there that people aren't aware of. It's just know where you are right now. Talk to a professional, and they'll tell you where you are right now, or they should tell you where you are right now, why they can't help you right now, and what you need to do so we can help you and win.
And that's the consultative approach you guys take.
Yes.
I know when I got my loan, it was actually with Johnny, and it's exactly what you just said. We sat down, boom, here's all my stuff that they needed. Here's where you're at, good, bad, or indifferent. Cool, here's what we need to do if we want to make this work. And then you move forward. So that's a very pragmatic advice. I like that.
Thank you. Yeah, and it's one of those, it's like mortgage professionals are not salesmen anymore.
Right.
Saleswomen anymore. They're not. It's just, here's the facts. These are the federal guidelines we have to follow in order to give you $600,000. This is not me being difficult. This is not my underwriter being picky. This is what the federal government, some companies will have overlays. Say on top of this, we need this, this, and this. We don't. If it's what the automated underwriting system says, hey, we only need 1 year tax returns, great. I just need 1 year tax returns. Oh, we got it. All right, you're proof done. Yeah. It's not selling. It's just facts.
Right.
You can find out what interest rates are by just Googling. It's not difficult. Right. So it's just having that knowledge, the experience, and the ability and desire to help somebody get into a home. Because right now is still one of the best times to do it. We don't have interest rates of 18% like we did 40 years ago.
Right.
They're not going to get much more than 6 where they are now. The national average, I think, is 5.9. So it's not. It can't get much higher. With everything else going on in the world, it can't. And that's why they're already seeing and alluding to a recession.
Awesome. So we're looking at it. You think housing is going to remain strong because the inventory levels are still lower. They're catching
Demand's
up.
Still high, yeah.
We have people moving here like crazy.
I can see why. It's beautiful. I'm glad I did.
Awesome. What else should people be thinking about if they've got a little extra money right now? Let's say they wanted to get a second property. Like, what does that look like? Is that something you can help with?
Absolutely. Yeah. That's something we would look at the finances and their finances, put the put the pieces of the puzzle together to make a picture is what I want to do for them. It's like, here's what your payment would be. Here's what rent is going for in this area. Here's how much we have to put down. Since it's within 100 miles, we have to do it as an investment property. It can't be a second home at that point. Just all those key points that you have to look at and know the difference and know how to guide that person to make that decision. It's like, again, I'm just going to give you facts. Here's what the mortgage payment would be on it. Is that something you could swing? Yeah, I can. Okay, well, your rent would be this much if you charged rent on it. If you did it as an Airbnb, I got programs that'll show you what the Airbnb prices are in the area, what the average price is, what you could get for your property. And it's just all that information to help them make the sound decision. I'm not going to make a decision for you. Right. I'm not going to push someone to say, oh, you should buy this house at $800,000. Well, I only want my payment to be $2,000 a month. Oh, you'll be fine. No.
You make that extra
exactly.
$200 up.
Yeah, it's just, I'm not going to push it on you. It's like, here's what you wanted from our initial conversation and interview and application, and here's how I can deliver that. Here's what this would look like. Here's what the payment would look like. Here's how much money we have to put down. Is that something you're comfortable with? And then let them make that decision.
Okay, awesome. Yeah, it seems right now to where anytime there's a recession coming up, and anytime, probably a terrible way to say it, but I heard it on a movie once, blood in the street, so to speak, buy property.
Yep.
Well, it just seems like now in the next, forthcoming year, 2-3 years, that'd be a really good time for people to have a little bit of money to invest. So
I think it is.
Something to think about.
Yeah, I mean, again, we got all these investors and internet buyers like Open Door and OfferPad. I mean, they're buying these homes and they're turning around and selling them 6 months later for a profit. So if they're going to turn around and sell it for a profit, guess what? If you buy that house, you just got yourself a bonus. You just made that money. I mean, the average person over the last year has earned $60,000 in equity. Wow. In the U.S., that's the U.S. average. That 35% I was telling you earlier, that equates to $61,000 a year that people have earned from their equity on average in the last 12 months.
Wow, amazing. Awesome. Well, if somebody's looking to get pre-qualified, how can they reach out to you and work with you?
Easiest way is my cell phone. It's always on me. It's still a 502 area code from Kentucky, but so many contacts and friends and family. It was like, it's just a number. But I do live in Gilbert. You can reach me at 502-640-2115.
Awesome.
Or Facebook, Cory Krebs.
All right. Well, guys, look them up. This is awesome. Thanks for giving us the state of the union and what's going on right now. Appreciate it. I know you guys got a lot out of this. If you guys have any specific questions, feel free to reach out to Cory directly, whether it's to get into your own home, get a loan, all that he can help with. But if you have other questions about investing, he's a wealth of knowledge as well. So make sure to subscribe to our channel, like this, leave a comment. We appreciate you. We'll see you next time.